Hi, my name is John Stevenson, the Guaranteed Retirement Guy. Today, we're going to be talking about how to maximize your income without touching your nest egg. All right, so you have some money, you want some income, but you don't want to touch the principal. Okay, we're going to talk about that. So I sell annuities. Okay, I make money from selling annuities, but sometimes annuities are not the best for everyone. Okay, and so if you want to book a call and you want to talk about annuities, there's a link below this video and we can talk. Okay, but today my purpose is not to sell you an annuity. Okay, I just want to show you what's available to you, and I also want to show you how you can do this without touching your nest egg. Okay, because some people want to make sure that money is there for their heirs. They want it for their estate. Maybe they want it for, you might have some grandkids you want to leave it to, or your kids. Okay, there are lots of good reasons to not want to touch that. And that's totally understandable. For a lot of us, when we only got, there's some clients that reach out to me and they've got 100 grand, or they've got 2 or 3 or maybe 500 grand. Usually, you want as much income as you can possibly get. And so you're not thinking about legacy so much because maybe you're leaving your house behind and some other accounts behind, which is fine. And so you use your retirement accounts for just that, retirement. And so it's for you, not for your heirs. But, and I'll show that to you for 30 seconds, but I also want to show you really what you came to this video for, is to how can you generate as much income right now without touching your nest egg. I'm going to show that to you right now. Okay, so I'm sharing my screen and I've got, just hypothetically, you're in Colorado, your age is 65, you're also married and your spouse is 65, okay? So if you were to just do an income product, and this is based off $1 million, okay? You can see all the top annuities, okay? You can see the top payout, $71,400 with Nationwide, okay? That will deplete the balance, okay? That will deplete your nest egg probably after 20 years, okay? It guarantees the income for the rest of your life. So you take it out for 30 years, you're taking out a lot of money. You're taking out $2 million, okay? But that is for income, okay? But let's talk about protecting your nest egg and having income, okay? So we're gonna go over here. We're gonna look at multi-year guaranteed MYGAs, okay? And these are very popular because rates are very high right now and people are taking advantage of these for income. But you have to understand that the income only lasts as long as the term. Okay. So we'll look at the same thing. We'll say, let's just go for as long as we got 10 years. There are some 15, 20 years. Let's see, we'll say 10. Let's see if there's any. Sometimes there aren't any 15 or 20 year available. So we'll look right now. It's still showing some 6 years. That's why I'm looking at that. All right. So 10 year. Yeah, it's still showing those. All right, so let's go over here. I'm going to look at the top 3 out of each one of those. That will make it better. Okay, so you got 2 years, and you can see the compound interest. They'll give you like 5.2. Okay, but there's no withdrawal in the first year. We want income. Okay, but years after that, you could take it. So some of these don't allow any free withdrawals. So and if you want highest income, but you don't want to touch your nest egg, you want to be able to strip off the interest, right? So we'll look up here and let's see. All right, so we do have a 20 year here. You see, it's a step up rate. So it means it starts out at a lower rate and then it steps up to a higher rate every few years. But the overall yield to surrender is 3.85. So if I look at that 20-year one, because this is the longest one we can do, and we don't want to touch anything, okay? We don't want to touch our nest egg, excuse me. So let's look at that. So we can see the interest. You're making $36,000 a year for a while, then $46,000, then $66,000, then $76,000. But the issue with this is they don't allow withdrawals. So that's not going to work. Okay, so let's go back here because we want to make sure, I want income. Okay, so let's go back here, top MYGAs. And so we got 7, 8, 9, 10 years, Ocean View. Okay, Ocean View allows free withdrawals after the first year. Artland allows free withdrawals of interest only. Lincoln Financial allows 10% right from the beginning. So if you need it in the first 12 months, Lincoln Financial is the best one. If you don't need it for 12 months, you can wait 12 months to take your first payment, then stick with Ocean View. Okay, they're A-rated and they're paying more. They're paying 5.5. Okay, and then you got the 20-year, but again, you can see free withdrawal on this is none. So you can't do it. This is just really a product for growth. That's all it is. You're not taking income, okay? This video is to show you how to take income without touching the principal, okay? Protecting your nest egg. So if you go in here, and this is showing you the guaranteed ending value if you did not touch it, okay? If you let it compound, it's gonna grow to 1.7 million. But again, we're doing this for income, okay? So we wanna protect our million and we want to have the income. So I'm just going to assume that you can wait 12 months, and we'll look at that. So if we look at this and we say, all right, well, I don't need income for 12 months. Got $1 million. Get the highest rate of 5.55. It's guaranteed for 10 years. So after 10 years, you're going to have to roll it into another product at whatever rates are at that point. Okay. So if it's in an IRA, you can roll it into this. You can take the income. And then at the end of it, if you want to roll it back to another IRA somewhere else, you can. Or you can roll it into another IRA with another MYGA contract. Maybe there's a lot of things you can do with it. Okay. So, but you'll look at this and you'll see that the earnings are $55,000. Okay. Every year for 10 years. So if you want to take out $55,000 in interest every single year, you can. And at the end of that, you'll have $1 million. And you can take that principal out and put it somewhere else. Okay, it's that simple. Now, if you don't need income right now and you still want to protect the principal, here's what you could do. You could let this sit and grow for a few years. Let's say 2 years you let it grow. Now you've got an account value of 1.114. Multiplied by 5.55, giving you $61,000 a year. That's pretty good. Now you're just like, all right, I'm making $5,000 a month. That's good. Now you can just take that out, live off of that for the rest of the time, and you'll have like 1.114 at the end of it instead of 1 million. So you actually made a little extra money, plus you were able to live off the interest. So that's kind of nice. So all these things you can do. Let me look here. All right, so for this one, so they allow 10%. So if you wanted to take out more than just the interest, you could. Okay, so let's say, just going back to here, okay, you let this grow for a couple of years. Now you're taking 61,000 out. Well, it's worth 1.114. That first year, you might just want to take $100,000 out. You can. Okay, and you'll bring your balance down to 1,014,000, and then the next year, okay, the fourth year, you'll be back down pretty close to the 55,500. And you'll just keep on stripping that interest off. Oh, you could take more, but then if you start taking more than the interest, you're going to start depleting your principal. And we're trying to just keep our nest egg and take income off of it. So you absolutely can do this. This is guaranteed. This is with an A-rated company, and people do this all the time. Okay, I've got clients that will put money into these, and they will start stripping off the interest on month one. You can do that if you want. Certain annuity companies will allow you to do that. I can go back here and you can see free withdrawal from Heartland, interest only. When you see that, and it doesn't say first year, it means you can start immediately. Okay. Same thing with Lincoln Financial. Maybe it's like, well, I want an A-rated company and I'm okay with 5.2 and I want free withdrawal right now, like next month. You can do that. So the income is not going to be as much. Okay. We already know 5.2. What are you going to get? $52,000, not $55,000. So that's what you just have to decide. If you're okay with that for having a withdrawal privilege earlier, you can do that. So you can see earnings, $52,000. If you let it compound, it's going to grow, you're going to have $660,000 of earnings. Otherwise, if you take it out every year, you're going to have $520,000 of earnings, 52,000 times 10. Okay. So, and then you take out your principal and throw it into something else. Okay. I sell these all the time. Okay. Rates are high right now. They're like 5.5%. They were 2%. Okay. Just a couple years ago. So rates are good. And with the Fed lowering their interest rates over the next, few quarters, at least that's what's projected, then these rates will likely go down. So if you're thinking about locking in rates and you're thinking about locking in higher rates of return, give me a call, okay? Or book a call. There's a link below this video. It goes directly to my calendar. Go to my website, johnstevenson.com, and go to the MYGA calculator, okay? And that'll show you current rates with everything, okay? You can check out all the different, and it'll show you a whole lot more than we're looking at on this video. You'll see a lot. But you won't see all of the details like I can share with you on a Zoom call. So if you want to get those details and you want to chat some more and you're thinking about purchasing one, I'd love to help you. Okay. There is a link again below this video. There's a link at my website, johnstevenson.com, and I'd be happy to help you. Okay. I'll be there to answer your questions. And I hope you enjoyed this video. I hope you got some value from it. Hopefully it's helping you in your retirement planning. If it is, I hope you subscribe and share it with your friends. And I hope you will comment below because I will answer, okay? I will answer your questions as fast as I can. And again, when you are looking for annuities, okay, whether it be income-related products or if you're looking for growth products like the MYGA that we just discussed, okay, I'll show you everything. Doesn't matter what my commissions are. Okay, some of these don't pay me very much. Some of these pay me 1% commission. Some of them 1.5%. Some of them 3%. The income products pay me more. Okay, it just depends on the company. But it really depends on you what you want. Okay, it depends on the type of goals you have. You might have legacy goals. You might have income. Sometimes what people do is they'll purchase an annuity or a couple of annuities for income, and they'll purchase an annuity or two for growth, and they'll leave that, and they'll use that for legacy. It's a good idea to do that because then you can use the best of both options. You have the growth, you have the legacy for your heirs, and you have the income for yourself. It allows you to be able to protect your assets and be able to maximize the use of your assets that you worked so hard to grow. So, all right, that's all I got for today. Appreciate you watching, and we'll see you next time.